Hello and welcome to the Lone Investor channel, and this is the weekly market update. So in my last video, I already covered my personal thoughts on inflation, recession, and Russia. So if you have not watched that video, you can check the link in the description below. But basically, I'm saying even if the Fed raises the interest rate, there will be another bull run before a true recession will come. As for crude oil, in my last video, I said the risk reward ratio is not that great for oil. And from Monday to Friday, we see a little bit of drop on the oil price. And I also said that gold will be a better choice for risk reward ratio, which gold raised by a little bit. And for gold stock, it raised more than 10% in a week. So in my last video, I mentioned that the S&P 500 is forming a head and shoulder pattern. And we'll mostly see a retest of the 4300 area, which we did this week. But I thought it was it on Monday when it hit 4,360. So it was about 60 points off the 4,300 target. And that morning I also bought Home Depot. If you have been following my channel, you know I've been eyeing for Home Depot for 346 price. So on Monday I did sell a limit buy this time for 346, but it didn't hit. And by the time I looked at it, it was 347-ish. And then I just thought, okay, I'll just get it. And I was doing pretty well for 2 days. I expected a bit of pullback as it hits a resistance here. And you know, Russia have been going on and off about withdrawing their troops. So there is still a uncertainty at the moment. So the points that I have made in my last video on interest rate, recession, and Russia, I still stand firm on those points. So in this video, I'm not going to go too much of the data again, as I'm convinced there will be another bull run coming. But are we there? Are we at the bottom at the moment? So the two main uncertainty right now is Russia and the interest rate. So we might see some consolidation in the next week, unless the interest rate is more than 1%, which I think is unlikely at the moment. If it's 0.25, 0.5%, I think the market has already priced in the interest rate for that. So as soon as the news come out for the interest rate, I think the market will ease off and it might have a little dip just to have a final reaction to the news. And I think that will be it for the bottom for the next 2-3 months. As for Russia, will the inflation turn into World War III? I don't really think so. I think any country is not stupid enough to start a world war at the moment. So even if there's a conflict and they do, let's say, step in Ukraine territory, it might just be a couple of days or a short period of time. So that's my personal opinion on those two uncertainties. But in this video, I want to cover the market sentiment. One of the most widely used market sentiment is the fear and greed index. So it's pretty much an indicator saying how the people are reacting to the market at the moment. So in extreme fear case, that's when you want to step in, and in extreme greed, that's when you want to sell. It's easier said than done. At my beginning of trading days, or if you can think of your beginning of your trading days, how many times have you buy in a stock when it's going up and then soon after that it's falling down? Or how many times when you sell a stock and then it goes back up right after? If you guys enjoyed the video so far, please help like the video and subscribe and hit the little bell for notification. If you think about it, when the majority of the people think a certain stock is going higher when they're buying in, what are the chances that everybody is right and everybody profit from the same trade? If that's the case, there won't be the 1%. This indicator is not 100% and you should never use a single indicator for your trading, but this gives you a sense what the majority of the people are thinking. So right now the index is at 37 at fear, but I was looking at the indicators and the put and call options is at extreme greed, but then I look at the update dates, it's on February 10th, so it's about a week ago. So here is a more updated put and call ratio chart. So on February 10th, it's at 0.9, that gives more call than puts at that moment. But right now we're at 1.17, so there's more put than call option at the moment. Now why is this important? So if you put the S&P 500 on top, a lot of times when you have a lot of put options, that usually indicates the bottom of another bull run. So you can see we have one in here, one in here, here, and in here. So they're at a almost inverted relationship between each other. So you can see since in November, there are less and less call options on the market. So besides the put and call options, there's the market volatility, the fixed index, the safe haven demand, the junk bond demand, the stock price breadth, the stock price strength, and the market momentum. So all of these make up the fear and greed index. So usually when there are a lot of fear in the market, that means people have sold their stuff earlier, or maybe they have cash on hand waiting to buy in the market that they don't want to buy in yet. So as soon as there's a market reversal, all those cash will be funneling back in the market. So that is another reason why you should think about buying the stock when the market is tanking and when the fear and greed index is at extreme fear. So overall, I think we're pretty close to a bottom for a short-term bull run in the next few weeks. We might see a false breakdown in here before a reversal, depending on the situation in Russia and the threat. So I would say the risk reward for the next month or so is pretty good at the moment. And if you take a look at the 10-year bond yield, the momentum seems to be slowing down. There's a bearish cross on the MACD, so it might fall back a little bit more next week, which will benefit the tech sector, which will benefit the S&P. So this is it for this video. Feel free to leave a comment if you agree or disagree of what I'm saying, and I will see you guys next time.